And joining me right now is Dan Bett, CEO, and Murray Patterson, Chief Geologist of Hummingbird Resources, HUM. Guys, thanks for joining me.
Thanks, Justin.
Thanks, Justin.
Of course, we've got a lot of questions lined up from private investors, but before we get into that, now subsequent to the mineral resource update you've just released, you've some more drilling results have come out, and you've announced that via RNS from your 2021 campaign. Can you give us a brief overview of that before we start the questions, please?
I'll give you a brief overview of the MRE update from 2020 first. To be honest, I think it's very encouraging news. I mean, it was 1 year's exploration program, $5 million spent. The objectives of that exploration program were to extend resources, to improve confidence in the known resources, and to simplify and re-clarify some of our mineral resource tables where we had some legacy issues of non-compliant resources and different codes like SAMREC and JORC resource codes. So the program achieved all of those things. And I think the headline is that in the space of a 12-month exploration program, with a limited budget, we discovered 255,000 ounces of gold, and the last mineral resource update was brought out in March 2019, so nearly 2 years ago, and the depletion is 258,000 ounces, so almost a complete, netting off. So that's a good result. In terms of the results brought out today, just to be clear, those are not included in that mineral resource estimate that was brought out recently. These are new drill results, hot off the program that Murray's conducting in the field up at Sanamali East, and they're designed to test the extensions of the discovery made last year, where Sanamali East looks to be more exciting and bigger and open than we previously anticipated. So there's some really good results coming out of that, and we're excited to see those.
The highlights from this recently released RNS certainly show that the drilling continues, or the mineralisation continues for at depth and along strike that are outside the current MRE, which we're highly encouraged by. We've discovered a whole new zone that we never knew existed back in 2020, which again is very exciting. That's going to form the basis of our mine plan, or our drill plan going forward for this year. Kouroussa East, we drilled in the north. We're seeing every hole hitting mineralisation, which is really good, and that's only going to add to the available mineable reserves there in the future once that mine plan's being finalised and completed.
Excellent stuff. Okay, first question. With the doubling of your exploration budget, can you outline what investors can expect to see on the back of this spend, Murray?
Yes, Justin. Well, our own internal expectations this year is all about resource growth, which was different from last year. This year as well, we've doubled our exploration budget to $10 million. And that's, the focus is on expanding the resources at those three key deposits that we drilled at last year. And they're the ones that are critical to the future life of mine extension and reserve growth at Kouroussa, and that's from the deposits of Sanamali East, Sanamali West, and Kouroussa East. And as I said just earlier, was Sanamali East, we're seeing really good growth potential there, and just highlighting a few of both the recently released results and the previous ones. Hole 402, for instance, had 42 meters at just over 4 grams per tonne. And the recently released one today, which is hole 421, had 38 meters at 5.39. So that's just showing some of the indication of its potential there. The drilling's ongoing at both deposits at Kouroussa East and Sanamali East since the start of the year. So we're well and truly into these programs, and we're getting back assays continuously, and we just look forward to updating the market when these results come in.
Excellent. Okay. With Yanafalila exploration, can we have a flavour of the potential for the targeted Greenfield sites, Murray?
Yeah, Justin, I actually feel like Dan's slipped this one in, but I know he hasn't. But from last year's drilling, we were successful at one of our targets, Greenfield's targets, called BBC, which is just close to Kouroussa East. And we're going back there this year to close it off. We're trying to infill as well as go around and close off any extensions, and then assess its resource potential. And if there is something there, we can quickly add it to the mine plan. The other exciting thing for us, though, is on the greenfields. and we've actually got a rig heading out to Diabarn, our main Greenfields target. That's starting this coming week. There's 4,000 metres planned there, and once that rig does finish at Diabarn, we've still got another 5 key soil anomalies to follow up on, and these are all located in the mining licence, and they're within trackable distance.
Understood. What is the updated projected years remaining for both Kouroussa East and Kouroussa West, Dan?
So the Kouroussa East and Kouroussa West pits have been the main base load of the mill feed to date, and they're projected to last in open pit format till towards the end of 2023. We've obviously then got a number of other pits, Gonka, Sanamali West, Sanamali East, that will come on stream at different times that will sort of make up the remainder of the mine plan going forward, and obviously the extensions from exploration work. And into that, I'd also add Kouroussa East is expected to go underground. So in terms of the pit, whilst it may end in 2023, I think ore will continue to come from the Kouroussa East deposit for many years to come.
Understood. Okay. With the current plan, when would Sanamali West begin to be mined? Would it be open cast?
So, I mean, I'll take that, Murray. So the plan at the moment is Sanamali West would be open cast. I mean, there's in the current mine plan, it's scheduled to come on stream towards the end of 2022, Sanamali West. These things are fluid, though. I mean, if we do start getting excellent grades at Sanamali East, that we may bring that forward.
Okay, and I'll see the next question from the same person, maybe, but it says, is all the above predicated on a steady output of gold at 100,000 per annum, 100,000 ounces, maybe?
I'm not totally clear on that question, Justin, but I think what the question is saying is do we anticipate Yanfalila to produce circa 100,000 ounces at a steady rate going forward? So if that's the question, we certainly have our life of mine plan that's certainly right, to produce in excess of 100,000 ounces and to maintain that through exploration and resource growth.
Okay, next one. Is the substantial rise in all-in sustaining costs likely to be temporary? And do management expect to be able to reduce it back below $1,000 per ounce?
It's a good question, and obviously cost is high in all of our mines. I mean, Yanfalila has had some high costs, and it's been going through a period of high strip and high cost. As we guided this year, we expect to see improved gold production and reduced strip ratios as the year progresses. So the AISC during 2021 should reduce, and obviously, you know, gold price environment notwithstanding, it's high on all of our agenda to get those costs as low as we can and get them down to a sustainable and more attractive level. We're not under any illusions there. I can't really promise that Yanfalila's AISC will ever get below 1,000 again. I mean, we're lower in the pits, we're mining fresher ore. There's cost pressures on fuel and other consumables. I mean, generally as mines get older, they get more expensive, but I certainly think it's a long-term viable, sustainable operation with a lower AISC than we've recently reported. And I think it's important to note that obviously we are building another project shortly in Guinea, and it's anticipated that will have a materially lower AISC based on the current forecasts of the grades and the rest of the mine plan there. So on a blended average, I think Hummingbird's AISC could well go back below $1,000 an ounce, and that's an ambition of ours.
Yeah. Okay. Is the Mali exploration and mine life extension budget of $10 million included in the calculations for the 2021 AISC guidance of $1,250 to $1,350?
No, it's not. So exploration spend is always outside of AISC. AISC is all-in sustaining cost of producing an ounce of gold. So it includes all your operating costs and your sustaining capital at the mine, but it doesn't include exploration, because ultimately, much as Murray will hate me for saying this, but you can just turn off exploration.
Yeah. Murray's looking worried there.
Yeah.
Okay, it's been a long time since the purchase of Kouroussa from Cassidy was agreed. When do you envisage it being granted?
Well, again, look, that's a good question. I mean, I know that the mining license is sitting with the cabinet in Guinea, and we are in regular contact with cabinet ministers and government minister of mines in Guinea, and I am confident and assured that there are no issues. It's just an administrative thing. But that said, obviously we would we would like the mining license. So, every week, I think they sit every Thursday. We're hoping that this will be the Thursday it's signed. So it's slightly it depends, right? This is one of those things that is out of our control. We can just keep close relationships and keep doing the early stage work and engagement at every level in the country. And I think everyone in Guinea is very excited and looking forward to the development of Kouroussa, as are we. So I'm sure it won't be long.
Yeah, marvelous stuff. And just one other thing, just on the price of gold, this is the time to be looking for gold producers, isn't it? I mean, a little temporary weakness in the gold price. I remember a while back talking about copper, and I couldn't understand why copper was low. And this is like about a year back or something. And I said, it's got to rally. And all of a sudden it went nuts. But it's that doubt, isn't it, sometimes? And isn't this very much the time to be looking around at the moment when the printing presses, money printing presses are on, hard assets are going to go higher. It's inevitable, but sometimes the price and the reality is a disconnect, isn't it? I mean, what do you think?
Am I going to quote you on this being a temporary dip, Justin, in 2 years?
But do you know what? If it goes up massively, yes. If it doesn't, no.
Yeah.
But,
So I mean, that's the point, right? Nobody knows. I mean, to my mind, logically, they've printed something like $20 trillion of liquidity. Surely we get inflation. Surely gold goes up and the value of real assets goes up. But in the meantime, that bonds are paying yield. People are chasing that yield, and maybe it's logical for gold to take a rest. What's a rest? How low does it go, and how long does that last? And obviously that means costs are important, and Hummingbird really needs to focus on keeping its costs down, but also building for what we do believe will be a very strong gold price environment going forward. And yeah, I think so. I think the gold stocks have all been absolutely murdered, and there's some real value out there. I don't know if Murray has a different view.
I'm just there to find it, Dan. That's all I know. So, yep, it's all good.
Yeah.
Excellent stuff. Guys, it's good to chat to you, and hopefully we'll be catching up in the not-too-distant future, and hopefully when the gold price will be a bit higher. Thanks very much.
Yeah. Thanks, Justin.
Yeah, thanks, Justin.